Hey guys, Wolf here. This is a quick video for bear market mistakes for 2018. Okay, so I have listed four here. I think these are the biggest ones. So I've been here since 2017. I made tons of mistakes back then, 2017. That wasn't even fair. That bull run, I made tons of mistakes. And then, the bear market of 2018 and 2020, I still made tons of mistakes. And I'm going to cover those mistakes. In 2021, I literally, made tons of money, hundreds of thousands of dollars profit. And right now we are in the 2023 bear market. And now I'm just geared up to make massive amounts of money in the next bull run, like millions, because I have the expertise and I have knowledge and I have money. I have everything going on for me. I'm very lucky. Okay, also. Anyway, so you can see the four bear market mistakes. Let's start. Let's go. So mistake number one, not buying anything because I always thought it would go lower. I mean, this has to be the biggest mistake people make with bear markets. I see it constantly with the people who are, for example, in my portfolio memberships, and people who I talk with. Some people buy a lot, and I think that not a lot, but they just keep acquiring. So basically, how you want to buy a little. Then you want to wait a little bit more, do more research, and then you want to buy a little bit more. And if it's still like it, you want to buy more. So basically, it's called building positions, right? And a lot of people don't do that, okay? A lot of people just wait for the price to go lower, and then they want to buy at whole. They basically want to buy all at once, okay? So that's a big no-no. Because it's very hard to buy the bottom, and then you will just buy too much, and then you will stress out how much money you're losing. Because in the bear market, all you see is red. All you feel is pain. Okay, just kidding. Anyway, but all you see is red, so it's not going to be fun in that way. But you want to buy in little pieces. Okay, so a lot of people, what they do is they look at your markets. They're like, okay, right now we're going down. I'm not buying because we go down more, okay? But when the dip happens, when we go ETH goes under $1,000 and low caps go minus 50%, then they are I don't want to buy because I think that it can go lower. You can see it just repeats. They constantly think that they can get lower, but at some point the bottom hits and then the bull run starts and then they just freaking miss out. Okay, so this was one, because I know this very well because this happened to me. I was looking at some peaks here. I remember looking at, for example, I bought some Cardano back then, also just weird stuff. But I bought it at 2 cents. I bought it 2 cents, then I was buying it, and I thought okay, it's going to go lower. Okay, because let me show you here. I don't like Cardano because there's no, nothing there. But anyway, let me show you. Here it looks like. But let me just show you what happens here. Okay, here. Okay, back. So this is the bear market before Cardano run up. Look what happened here. So it was 10 cents, then it was 2 cents. So here I remember buying it 2 cent, 3 cent range. I probably bought it here or here. I can't quite remember. But here, if you you constantly if you were here, here you would be okay. I'm not going to buy Cardano because 10 cents. Okay, here it's 2 cents. I think it can go below 1 penny. Below 1 cent, but it never again. Then it regained, and then it went to 3 cents, and here it almost went to below 2 cents here. Again, so here it could be okay, so now I think it's going to go 1%. I'm not going to buy, and then the bull run literally just started, so you missed out. Okay, so it sounds stupid. It looks like here stupid, but if you have different kind of levels where you want to buy, usually it won't go to those levels because other people also have those levels in mind. Because people just full numbers. Okay, people we don't like numbers 2.078. We'll much rather buy something that's $2, right? It's crazy. So, but this is the reality. So people in their mind constantly look at these things and they want a little bit slower than others. People like good deals. Okay, so they're looking at a deal. They want to buy Cardano at 1 cent. Okay, but that never happened because other people also wanted that. So that the market just picked it up there. So then they ended up not buying anything, and it would be literally the same. If you would have bought Cardano at 10 cents, 6 cents, 3 cents, it went to fucking $3. Okay, it didn't matter if you bought anywhere here. It looks look how stupid it looks like. It looks like if you bought anywhere here, but if you really zoom in here, it looks like look at this emotion roller coaster here. Now it's even bigger, but there's tons of leverage trading and stuff like that. But it's crazy. It's insane. So that's why this is the biggest mistake. It doesn't seem a big, like you could, yeah, of course I'm waiting for lower, but it can really like destroy you, because it's a habit that you, it's just when it goes lower, then you will be like, okay, I'm not buying now because I think it will go lower. Anyway, that's enough for that. Let's look at the next one. So underestimating the bull run's momentum once the bull run started. So this is huge. When the bull run hits, it hits like a freaking bull. I'm telling you, it hits like a bull. It just switches, and then after that, like, goodbye the bears. Like, it was insane. Like, during this whole bear, it was bear, and then the bull run. Look how when it switched up. Okay, here it's still like a little bit run up here. Here everybody still thought that the bear market was still continuing, and here everybody started bear market was continuing. But here when it hit up, like boom, it didn't stop. It just didn't stop. It just kept on going. It was insane. So you know, you really want, if you, because here when here for example the low caps went to freaking moon, they just like they went to freaking crazy. So it's something that you don't want to miss out on. So that's why building positions in the bear market, it's stupid, it feels stupid, everything is going down, but once the bull momentum starts, like you will be extremely happy you built the positions, right? So this is a big one, underestimating the bull momentum. And this next one is also massive, so not being diversified enough. A lot of people, when they find a peak, they just go all in on that one. They just buy the one peak and they want that peak, because you know, people don't like uncertainty. People like certainty. People like, that's why a lot of, when you see like you know, when you buy anything, there's always like like if you sell something and you don't say guarantee, like you are guaranteed that this will work. If you don't, you will get refund. People buy like that because, you know, they want guarantees. But I think that that's just moronic, because there is no guarantee in life. Like, think about, nothing is guaranteed. Okay, so with that mindset, you can just be like, if you buy only one pick, okay, it's not guaranteed that it will make you money. It's not guaranteed. So you might as well be like realistic. Okay, so maybe I'm just over optimistic about this pick, and maybe we need to add more here just to diversify the risk, right? So what, you know, because this would be just pure greed and pure hope, or like optimism that everything will turn out well. But this is like when you diversify, you're like, okay, there's other picks that, you know, can actually also do well. Okay, and I think this is a lot of new people when they're coming, they just fall in love. For example, you can see this happening with like XRP and Cardano. You can see this happening with, they just buy one, they just buy the one, and that's it, boom. But I think that that's very dangerous. And if you know, some people can make money that way, but at some point they will learn you need always be diversified. If you study any great, you know, investor, they always diversify. None of them, like Warren Buffett, Howard Marks, Charlie Munger, none of them just bought one thing and be like, okay, now I'm rich. No, they buy multiple things. They're very smart with their money. Okay, so diversification is literally the key in my opinion, because you diversify the risk. Okay. The next one, so going against the narratives. Okay, so this is a big one also. So what I did here, I remember, so I was looking at the, you know, back in 2018 and 2020, I was looking at the, you know, CoinGecko or whatever I was looking at back then, but basically markets, and I was like, yeah, so there's this, for example, Matic, so yeah, there's this scaling solution for ETH and stuff like that, yeah. So basically, that was the narratives were what they were. Like, for example, and the data network, decentralized YouTube. Like, it's very hot and sexy trend. Like, very, like, huge. And I was like, no, that's not a huge thing. So I literally destroyed my own self by going against the narrative. If the narrative is big, if the peak has, like, some huge backers, or if the the peak has, like... you know, something special about their technology or anything like that, that you don't want to go against that. Do not go against that. It will just bite your back, because people just are very kind of like simple when it comes to this stuff. They just ape, like they just literally ape. And also when the bull run hits, people just freaking ape, because everybody's making money. People just go crazy. So don't go against narratives, in my opinion. I'm not a financial advisor, but this has a, you know, this was one of my big mistakes. I saw something and I was like, nah, that's not going to happen. So I go against the narrative, so I missed out, right? So those people who had open mind, they was like, yeah, there's something here, and let's allocate a little capital here. They made millions. Okay, that's huge. And the second one is not thinking what the next narrative could be. So basically, it's more about narratives. So basically, there's going to be new narratives constantly. One of the narratives, for example, here would be ETH scaling with Matic. That was a massive narrative, and that just manifested in the bull run of 2021. Like all the layer ones, everything related to ETH scaling just blew up. That was a massive narrative. So right now, if you think about narratives for the next bull run, CK rollups is one of them. So don't miss out on that. That's a massive. It hasn't even started to yet go, but you know, that's why I'm in the lockup portfolio. I'm going to add CK roll-up picks and stuff like that. So I think that's massive narrative. Okay, so definitely want to play out that. And also, ETH scaling is massive narrative. Like in the next bull run, like you know, and also gaming and NFTs is massive narrative. I'm telling you. So and AI, AI is the biggest one in my opinion. It's just going to be ridiculous. And also ETH layer 2, because everybody will be on the ETH mainnet will be so clogged up that everybody has to go to layer 2s. So I think layer 2s are going to get tons of attention. That's a massive narrative on, you know, and again, same type of thing that in the last bull run. I think it's going to print again. So you know, that kind of stuff. Like, don't go against it, because you know the masses will just freaking ape, and they will make they pour tons of money in here. And the masses buy here, and you could potentially cash out by buying on the low and then selling here to the masses. Anyway, so hey, this was the quick video. I'm not a financial advisor. Hope you learned something here, and thank you so much for watching, and peace out. Okay, and if you was in the last bear market, or if you have anything you want to share, comment down below. Would love to hear your insights, and peace out. Okay, see you tomorrow.